Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me and can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So in today's live stream, we're going to start by talking about Aussie dollar, what the market is doing on Aussie. I'm going to start with a fresh chart and we will do the analysis, and after that we will look at Euro US dollar swap analysis from 12 months, and then we scale down to the smaller time frames as well. So looking at Aussie dollar, the only thing I can see right here is the fact that we have a high right here, and then price broke structure, and as you can see very nicely, we came to the downside, mitigated this key level, took liquidity, mitigated the extreme discount. Next thing we scale to the monthly time frame. In the monthly time frame, you can see clear as day, we have this inefficiency here. This key level is a very technical key level. You can see that this was the inefficiency. Price came down into that inefficiency, smashed through it, went for liquidity, expanded higher, smashed through it again, rallied, smashed through it again, rallied, smashed through it again, inefficiency here. You have to understand that this key level, if we're going to continue higher, this key level, whatever price is doing right here, could be a potential accumulation for a continuation, and we'll be hunting for buy side liquidity. Scale down to weekly time frame to see what the weekly time frame is doing. Right here you can see very clearly on the weekly time frame, price came to the downside, broke structure, we have structural high right here. After that, break of structure, went to the downside, mitigated this candle, expanded, broke structure here again. After this break of structure, still take notes, we do have an inefficiency here. We go to daily time frame. On the daily time frame, so you can see overall this was the weekly high that got broken, and this weekly high that got broken, that was facilitated by this down close candle. So two things are involved right here at this key level. One is price is either gonna mitigate the bodies of the candle, continue higher, or it's going to run the sell side liquidity to continue higher. Now we don't know which one price is going to do, whether it's going to be for the run on liquidity or whether it's just going to mitigate the bodies of the candle. You can already see that on the daily time frame, this inefficiency had been mitigated, but that still doesn't mean the price can't come down here to run the sell side liquidity. That being said, we go to 4-hour time frame. We want to understand the structure on the 4-hour time frame. What is the market structure? And right here on the 4-hour time frame, we can see structural low, structural high, structural low, a high, this low, this high. So far you can see how nicely price is respecting the lows and highs. So what do we do with that? What we do, we anticipate potential accumulation from here, but that still doesn't mean that price cannot run this sell side liquidity. Now what we do, if we're bullish and we're anticipating for a potential continuation to the upside, what we would like to see, price mitigated this key level. We'll be looking out to see areas the price will mitigate and then potentially continue higher. So far you can see very nicely this key level. This was the last down close candle before expansion, rallied above this key level, broke that structure. So we can outline this position. Now we're not going to jump into any trade from here blindly, because in as much as this could be an area for price to reverse and continue higher, price can also smash through this key level and come down here. Remember, this would be the perfect area for a buy setup, but it doesn't mean that it will definitely come there. Reason why price is not mandated to come here is because we have a structural low, structural high on the 4-hour time frame. So that's being said, price can actually decide not to come down here. We took liquidity from here and potentially continue higher. So what we'll be looking at to see from here would be a 15-minute shift on market structure. If we see a 15-minute shift in market structure to the upside, then we'll look for a re-entry. We'll look for a retest. Once price comes down for a retest, we'll wait to see a 3-minute shift in market structure to the upside, and then we can potentially buy. So that is what I'm watching from here. And if we go down to 1-hour time frame, there isn't really so much to see on 1-hour time frame besides the fact that this was the last down close candle for expansion. 30 minutes time frame, nothing much to see here either. 15 minutes time frame. On the 15 minutes time frame, there's not really much structure that I'm seeing here besides this high and this low. So I wouldn't really regard this as a structural high. So even if price rallies above this key level, I'm not going to be looking for a buy. So that is what I'm watching on Aussie dollar, and hopefully we do get, hopefully if we do see the break of structure above here, that's when I'll look for a buy above right here, because to me this is the high and this is the low. So if price doesn't break here, then I'm just going to be on the sidelines, and it simply means that potentially we could run the sell side liquidities resting right here. So I'll be watching this very closely, and if I do eventually see anything interesting, I'll still share it with you all as well. So the next thing we're going to do now, we're going to go down as well and we look at what's happening on Euro US dollar as well. So let me pull out a chart. I'm going to wipe everything on this chart as well. So for Euro US dollar, we'll have our low, we'll have a high, low, high, and then we'll create a high. As you can see, price came down into this inefficiency, resting at an extreme discount zone, mitigated it. After that mitigation, we go to monthly. On the monthly time frame, we're still within this range high and this range low. If you use the Fibonacci from the low to the high, you can see we're still at an extreme discount. We're still at a discount zone, not extreme discount. Scale down to weekly time frame, and on the weekly time frame, you can see how we were trending to the downside. Lower high, lower low, lower high, lower low, until we had this impulse move to the upside. Impulse move to the upside, broke structure right here. So you can see that very clearly. We had the impulse move, broke structure to the upside. So far, high, low, high, and then created a low, high. Now we're having a huge displacement to the downside. So overall, from the 12-month time frame perspective, I'm still bullish on euro. On monthly, we're still within this range high and low. We're at a discount zone. We go to weekly time frame. On weekly, we have a high, a low. So if we look at this on the weekly, because this high right here, there wasn't a candle closure here, so this is what I would regard as impulse leg. I wouldn't regard this as a high. I regard this as a run on liquidity. This is my low. So now I'm just going to share with you one thing I usually look out for in the market, right? If I'm bullish, and in this case, you can see price came to the downside, but I'll first explain this as a bullish structure. If I'm bullish and price is creating lower high, lower low, lower high, and then eventually creates a higher high above this previous high, I want to see a candle closure above this high. I want to see a candle close above this high, and that candle closing above this high, then I'll look for a retest. I'll look for a buy. Same thing goes for sell. If I'm bearish, the same thing goes if price is trending. If I'm bearish and price is trending to the upside like this, higher high, higher low, higher high, higher low, break of structure, candle close, I'll look for a retest like this, and then I'll sell. I want to see a candle close. Now, if this candle closure right here, if price drops to the downside and uses a wick to run this low, and then goes back up, comes back down, uses a candle to close below here, but fails to close, and the candle fails to close below here, which is the wicks, and then we see price continue higher. I will not be surprised to see this. Does that make sense? I know it sounds very complicated, but I'm going to share with you with live example of what I mean. Looking at this right here, we have our low here. If we are to become bearish on Euro US dollar, this is the low that I want to see price break, not this one. This one is the low that I regard to be a market structure shift. This is the one I regard to be a market structure shift. Why this one? The reason why it's this one is because this low is the swing low that created this overall high. This low right here, you can see we have a high. There was no candle closure, and a low and a high. This is the overall swing move to the swing high. I want to see this overall swing low get violated. Once it gets violated, I want to see a break and a close below it. In this case, you can say yes, there was a break and close below it right here. But why I wouldn't really regard this as a break and close is because this candle here came to the downside, took liquidity from this low, went to the upside, we saw price come down, failed to close below this. We need to see this close below this. If it doesn't, anything can actually take price to the upside, and then we could see something like this. And run the buy side. Does that make sense? So that being said, if we go to the daily time frame, on the daily time frame, so you can see clearly we've been trending to the downside on daily, creating lower lows and lower highs. And right here you can see we have our low here. We look at the weekly time frame. Right now on weekly time frame, we're working with this range high and this range low. We'll go to 4-hour time frame. If you look at this on the line chart, you can see how price has been going to the upside, high, low, high, low, high, low, high, low, and a high. Consolidation, run on liquidity, displacements. If you look at right here, we can see we have an inefficiency here. You can see how that acted as a draw on liquidity, attracted price to the downside. We smashed through the liquidity, we smashed through the fair value gap. Go to 1-hour time frame. On the 1-hour time frame, you can see we have this huge inefficiency resting right here. If we mitigate here and I see a 5-minute break of structure to the upside, then I'll look to see if we could potentially continue higher from that key level. So if we look at the weekly time frame, we use the Fibonacci from the high to the low. We're currently at an extreme discount. Price is currently at an extreme discount of this weekly range high and range low. So we'll have a high, we'll have a low. We're watching this new structure being created to see if it's going to create a high and a low. And if it does create a high and a low, then I'll be watching to see for a potential break of structure. If I do see a break of structure to the upside, I'll still wait for a confirmation. When I say confirmation, I mean I'll still wait to see a 2 minutes break of structure to the upside. And if I do see that, then I'll look for a buy on this one. But if not, I'll just be on the sidelines, because it simply means that there's still more things that price is hunting for. You can see how we created a low, a high, dropped, broke structure, came back, mitigated the inefficiency, displays to the downside. Anything can still happen because of the CPI numbers. Anything can happen and price can still continue higher to run the sales high liquidity. That's still possible. So this right here is our last line of defense. If we don't see any bullishness from here for price to go to the upside, then it's game over. This low will be in the next run on liquidity. That is my analysis on Euro and Aussie dollar. If you do have any questions, feel free to drop it in the chat. I appreciate you all for tuning in, and I'll talk to you all in the next live stream.